It was a mixed bag from Reliance Industries in the second quarter. Revenues have beaten expectations. Gross refining margins, they've dropped to their lowest level in over 2 quarters. So the stock is down about 5%. Sonal's here with all the analysis. Sonal, the street doesn't like it one bit.
Actually, I think they liked it before the results were out. The stock price had run up quite a bit before the results were announced. But yes, as you pointed out, it was a mixed bag. If I just tell you how the results were in one line, the refining business, that was quite weak. Petchem business was quite steady. Retail business was very strong. And Reliance Jio, that posted mixed set of numbers. If I break it down for you, well, GRMs, they were at a 9-quarter low, came in at $9.5 per barrel. And that weakness was seen because there were certain shutdowns that the company took in the quarter gone by. The Petchem business was quite steady. We saw that the growth rate came in at 3.3%. However, the growth rates have slowed down. So 3.3% is compared with a 22% growth seen in last quarter and 12% growth seen in quarter 4 of FY18. Talking about retail business, quite strong. We saw EBIT margins going up by around 150 basis points. Even EBIT was up around 272% on a YOY basis. Reliance Jio, the revenues were a beat. They came in higher than estimates. However, the profits were lower because of higher finance costs. Subscriber addition, that was very strong at 37 million versus an expectation of 32 to 33 million. Also, the ARPU was lower, but that was as expected. They came in lower by 2% on a quarter-on-quarter basis. Additionally, Reliance has also announced an acquisition of 66% stake in DEN Networks for a consideration of 2,290 crore rupees and an acquisition of 51% stake in Hathway for a consideration of 2,940 crore rupees. Brokerages are very sanguine on the stock. Citi has a buy call with a target price of 1,300 rupees per share. However, they have trimmed down the FY19-21 earnings by 1 to 5% because they see certain headwinds coming ahead. Macquarie has an outperform call with a target of 1,315 rupees per share. They think the GRMs were lower because of the FCC shutdown that we saw. BNP Paribas also have a buy target, and they think that the IMO 2020 regulations will boost their GRMs going ahead. And DB, they have a buy call and they have raised the target to 1,270 rupees per share. And they also say that the stake buy in DEN and Hathway is another step to accelerate their monetization of the broadband business, and they have a buy call on this stock. Standard disclaimer, Reliance Industries owns the channel that the viewers are watching. Back to you.
Okay, all right. Thanks so much for that, Sonal. That's a disclaimer up for you on the screen, but we need to focus on the markets, and you should pull up a contribution chart. We're down around 140 points approximately. Reliance Industries, that's the big heavyweight on the Nifty itself. If that's down close to around 5%, a substantial part of the Nifty cut that we're seeing, nearly around 53 points, is only because of Reliance Industries. So keep that in mind. But really, the housing finance companies, they're getting slam dunked. India Bulls Housing Finance is now down close to around 15%. Remember, the book value is roughly around 400, 420 rupees approximately. One would have thought that it's basing out at around 2 times price to book. That's not to be. The stock is down 110 rupees. Remember, this is on the back of another 10% fall. So that stock is absolutely getting clobbered. And not just this one, PNB Housing Finance as well has taken a bit of a knock in the last few minutes. So the intraday chart should come up for you of that stock as well. Move to the low point of the day as we speak. And a lot of these housing finance companies, Divan Housing, in fact, is now moving towards the 200 rupee mark. So keep an eye out on that stock. But we've run out of time on Chartbusters. You stay with us. Trading Hour comes up next.